Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all on YouTube as expected around 11:30 a.m. And hope all of you are doing well and doing great with your investments. So today I want to talk to you about two companies which are in the mid cap domain and which have been doing well for the past few years, but due to the market, you can say, movement that we have seen so far, the companies have not done that well recently, or the stocks have not done well recently and are coming at attractive levels. So we are going to discuss about that. We are going to discuss a little bit about the markets, and I'll answer your queries as well. So let more people join in. It's a Sunday afternoon, so hopefully Sunday morning. So hopefully more people should join in, and so we'll wait for 4 to 5 minutes and then begin the session in earnest. uh, Anand, hi, good morning to you. Sagar, a very good morning. I'll answer your queries later on, so keep that for later on when I start the Q&A session. I hope investment journey is going well for all of you. Trading, or you can say positional trading, is up and down at the moment. As far as I am concerned, I'll be very honest with you that from November onward, there have been very little profits that I have booked, and I have gone into deep losses in a couple of stocks. So it's not that you're the only one who are making losses in some stocks or the other. There are other investors who are doing that, other investors who have been in the market for the last decade or so, who are making losses at the moment, but that's just staying put. So as far as I'm concerned, I'm staying put with my investment. I'll update the portfolio again. It's the same portfolio that I updated earlier. No changes have been made. So those who would like to have a look at my portfolio, join YouTube or on Patreon. Uh, but basically speaking, just stick to your guns, and hopefully when the tide turns around and things get normalized with respect to war and oil prices, etc., the stocks should perform. If your companies are robust enough, they will perform in the next 6 to 12 months. So that's the call uh, with me here. Samadan, very good morning. Morning, Sagar. Uh, Loss to profit, walaikum salam. Uh, so, Anurag, a very good morning to you. Tarun, a good morning to you. Hopefully, you're having a very good Sunday, and try to relax this time around, because next week could end up being more volatile with the kind of news flow that we are seeing from Europe, and the oil price fluctuation that we are seeing. Plus, finally, we are getting oil price hikes here in India as well, and probably by June we will get a RBI rate hike after many quarters. So there could be a rate hike coming in as well. So all these things coming together do not augur well for the market for at least the next 2 3 months, and that is why probably it will be prudent for all of us to stay with the defensive, stay with the IT and pharma if you are invested there. If you are not invested there, then probably whatever stocks you're invested in, if they are robust enough, those businesses are good enough for the next 1.5 years, stay put with them rather than booking losses, because things could turn around very quickly. This is how the markets have been globally. So once the oil prices calm down to below $100 per barrel, again all sorts of economy related stocks will also start moving up. So let's begin the session in earnest, and let's talk about the markets first, and then I'll talk about the couple of stocks that I wanted to talk to you about, and then I'll answer your queries. So, first of all, about the markets, 17,200, 300. I believe 17,500 to 17,700 will be a strong resistance no matter what happens going forward. And going see and probably on the downside, 16,500 to 700 would be a very good support. So we are in this 1,000 point range between 17,600 on the upper end to 16,600 on the lower end. We are right in the middle at the moment. We could go below. When we go below 17,000, closer to 16,800, 900, that is where we need to start accumulating, because we don't know from where the markets could turn around. Anurag, thanks for your contribution. Losing 24% in About India, CAMS, kindly advise. See, in both the companies, the recent results have not been that great, and with most of these types of pharma companies going out of favor with the pandemic going away, I think you're going to uh, be in limbo with these stocks for the next 2 quarters. If you are in for short term, I would say book your loss and move on. If you can hold 3 years, I think you'll be able to make something like 30 to 40% in the next 3 years on your capital. So you'll cover your loss and probably be up 35-40% 3 years from now at least. Uh, Camps India, I'm more concerned compared to Abbott. I believe camps have to come out with very decent numbers. I don't know the reason why the company is coming out with the lower than average, you can say, industry returns that are, or average industry profits and sales growth. So Abbott, I'm not that concerned. I think Abbott will show its class over 3 years, 4 years. But camps, be a little careful. If you get any rise in the stock, 10-15% from current levels, take an exit with a small loss on cams. Okay, so coming back to the market, I believe that it will not be that easy for the market to scale 17,600. It will not be for the markets to go below 16,600. We have to play this range. And remember that earlier we were having a range between 15,700 to 16,700. This is a 1,000 point range that we have been circulating in for the past year or so, and that's how the markets have went ahead and gone up to 18,600 and gone down to 16, 15, even 15,600 kind of range. So the low was 15,711, but it could have gone to 15,600 as well if it would have broken that. So I believe that any level below 16,800 accumulate big time. Any level closer to 17,500 in the short run, if you're making 15-20% on your holding, uh, take your profits off. For slightly longer term, you can say investors like me who trade into the markets for at least 3 months minimum to up to 6 to 8 months. I believe that this is the time to just stay patient, stay with your holdings, and look out for the results. If your company has come out with very good results for the last 2 quarters and are expected to give very decent results for the next couple of quarters, there's no need to worry. I think results will take care of the stock price, and you'll get a decent exit. I won't say that you'll make 30, 40, 50%, but you'll get a decent exit between 10 to 20%. And that's where you can make your profits and stay afloat. Remember, 2022 will be a year, at least for the first 7-8 months, to stay afloat. I have said that in January as well, that this is not going to be a very smooth year, and there could be volatile moves, and that is what is happening. After two very strong years, from 2020 March onwards, there had to be a period of at least 12 to 15 months where you could be, I mean, at least 6 to 8 months where you could be tested a lot in terms of your patience, in terms of whether you have the capital, you have the gumption to stay in the market. So it is time to be in the survival mode for the next 6 months, and then probably in the later second half, yeah, around Diwali or just before Diwali, I think the big move could take place in the market, and I'm still positive that we will see 19,000, even 20,000 on the Nifty in the next 18 months, somewhere in the next 12 to 18 months. But there will be a lot of up and down movement. There could be a situation where we could see 16,500 also. So for investors who are very short term investors, we are looking at, say, trading into the market as a positional traders, from a 6 to 9 months perspective. We have to be extremely careful in order to safeguard our losses. For investors who are more than 3 years, who have a time horizon for more than 2 years, 3 years, 5 years, I'm I'm pointing out one stock at least, which looks extremely attractive, and that is where I'm going to begin the second part of my session. Uh, Two stocks I'm going to bring to you. One, I believe, very, very attractively priced from a 5 year point of view, 3 to 5 year point of view, no immediate returns, or there could be a chance that the stock may go down 15 to 20% in the next 6 months. There could be a chance that stock may not go down at all and may go up from here. And the second stock is a kind of a positional 6 months trade, where the stock looks very, very attractively priced and the season is right ahead. So let's begin that part. So the first stock I want to talk to you about is a consumer name, is a food consumer name, and a big name into, you can say, uh, outdoor cuisine, food, or even delivery cuisine, you can say, or delivery stuff, or snacking, or you can say part-time food, etc. I'm talking of Jubilant FoodWorks. A lot of things have happened in Jubilant FoodWorks. A lot of management changes have happened. CEO has resigned. The same CEO that has brought you can say Domino's to a level that it is today in India, from a level where the stock was trading at 900 rupees before he joined in, to a level of say 5,000 rupees at the peak. The stock after the announcements fell even more, and the stock was falling even before that because of the kind of inflationary pressure the company is going to face. This is the best time to invest and the worst time to trade into the stock. Remember, this is the best time to invest into the stock, the worst time to trade on a short term basis into the stock. So do not buy from a 3 to 6 months point of view, but if you have more than 3 years perspective, then I think you are going to gain at least 100% from here. I think you can buy around 2,600, 2,500, buy in chunks, buy 20% now, buy 20% more at, or 30% more at 2,500, buy 50% if it goes to 2,200. I believe that 2,350 to 2,400 is a strong, strong support. I don't see that getting broken unless there is extremely bad news coming out of the company, or there are very, very bad numbers coming in. But remember, change in management in any way is a detrimental or a very positive effect on a stock. So this could be very bad for at least a year. So this could really get bad. This could, I mean, the stock could go to 2,100. That's why I said that buying chunks of 15-20% of your total holding. If you want to buy 1 lakh rupees of Jubilant Foodworks, buy only 20,000 of it at this point of time. And this is not a 6 months trade. This is not an IPL trade. This is not something like that. Of course, it can go up for a while, but it will come down again, because I believe that the negative effects of the management change will be seen over the next 6 months, along with higher, you can say, raw material prices, higher food prices, higher everything. All the prices will go up, and that inflationary pressure will show on the margins of companies which is in the food domain. And that is why companies like Britannia, Nestle, and even companies which are into gold and etc., like Titan, is are under pressure. So not to say that the reversal is right away possible, but these are very attractive levels to buy. I think in 3 years time we could see the stock closer to 5,000 rather than closer to 2,000. So that is why I believe you buy some at 2,600, you buy some at 2,350, you buy more at 2,100. The company is not going to shut down. It is a huge brand here in India, and the valuations have come to such a level. It's trading at 80 times earnings. Worst case scenario, I believe that it could trade at 70 times earnings, and there will be a heavy buying. So 10% from here, which is around 2,400 or 2,360. And that is why I said that 2,350 is a strong, strong support, I believe. I don't see that getting broken. So very interesting levels to get into it. Remember, long term lower PE ratio for the stock has been around 70, between 55 to 70. But let's take that 55 out, because that was a time when everything was trading at a very low PE, everything in the market. If that happens, uh, that was a time in 2016-17. So if that happens, then we are looking at the market being at 12,000 or 11,000 or something like that. I don't think that will happen. I believe that the stock may at worst trade at 70 times earnings, which is around 12-13% from now, from here on in, which is around 2200 at worst. I don't see 2350 broken, but if that happens, maybe we'll see 2200. That would be even better levels to buy. So you buy 20% now, you buy more at around 2350, you buy even more at 2200, put in everything at 2200. I think from there on in, you could see a real revival in the stock. I see 5,000 on the stock in the next 3 years. So that's Jubilant FoodWorks for you. Second stock that I want to talk to you about, and this is a positional trade. This is a trade that you could take from a 6 months point of view. I have been monitoring this stock. I have been analyzing and looking at this stock. This stock is part of the watch list from a short term point of view in my portfolio, in my watch list as well, which is shared with the Patreon or members or the YouTube members or WhatsApp members. Uh, and this stock is Coromandel International. This is into you can say agrochemicals, and the season for uh, agrochem season for the farm season, as you call it, will begin from May June onwards, and it will be a huge season this time around because of the washout season we have had in 2020 and 2021. I believe the stock trading at 780 790 has very good potential. I think it's trading around 780, very good potential to go to 900 950 in the next 6 months. I believe that there is a chance to gain 15-20% over the next 6 months on the stock. Keep a stop loss at 740, and this is a very good trade for someone to look at. Sorry, not 740, but keep a stop loss at 690 and buy around 750, 760 on any dip. Keep a stop loss at 690, below 690, exit the stock. But I see 900 on the stock, very much possible. 880, 900, 920 over the next 6 months. I think numbers are set to improve. Although raw material prices have increased, but the demand will surge only with the pandemic away. I think there'll be a lot of sales coming through. So the stock is trading at a very interesting level. Again, a stock that is trading at around 16, 17 times earnings. And normally the lower case scenario here is around 15 times earnings. So at worst, we are looking at a 10% downside from here. And that is where our stop loss is. And we are looking at 20-25% upside on Coromandel International. Very good uh, a stock, very strong management that to look forward to. So these are the two stocks: Coromandel International from a 6 months point of view, and Jubilant FoodWorks from a 3 years point of view. Look very attractive here. I would love to read your comments on these two stocks as to what you feel about it. Whether you feel that I've talked about it in you can say hurry, and you believe that Jubilant is not quite a buy at these levels, do write up your comments on that. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that helps me grow the channel. Help you also ask me questions and echo answers in greater detail. For the next 10 minutes or so, I'll be answering your queries. So shoot those queries to me. Okay, so see, I won't be able to answer so many questions, Ajay. What I'll answer is about Kilpest. I think around 360 to 350, 360, 330, 340 are very good levels to accumulate Kilpest. I still believe it will be huge over the next 4 or 5 years once things get going. And I have talked long and hard about the stock. Kindly do look at my video on Kilpest being a multi-bagger and you'll be able to understand. Okay. So one beverage is, I believe, around 910 to 930, 910 to 930 are very good levels to buy into Varun Beverages. A disclaimer: I have the stock as a trading position. I believe first target is 1100, and then we are even looking at 1400 on the stock in the next 6 months. Very positive on the stock. See, Nazara, I'm not very positive on the stock because their business is good. They are in a very strong business, but their apps and their products are not that great. So I won't say that you stay with Nazara. Venki's, I believe these are very decent levels. So don't sell here. Probably on any rise to 2600, 2700 would be the levels to exit. But if you can have a 2 to 3 year point of view or 2 to 3 year time frame, I think Vankeys will make you profitable big time over that period. Okay, Ravi, thanks for your contribution. TV 18 at 55, and I buy more or wait for fall. Do not add. Do not add. Probably it's headed to 90 and then 105, 110. What you do is probably hold on to the stock and book profits around 105, 110 on TV 18. I think there is a chance it could go there over the next 6 months. So that's what you do. Do not buy more. I won't say that you buy more into the stock. All right. Sir, what about new Motherson Sumi wiring stock? It was expected to be around 60, 70. But when it got listed in my account, its price was around 25. See, simple point here is that you have to wait out with all your Motherson Sumi stocks, whether it is wiring or into that auto, you can say auto ancillary stocks. Autos are going through a lot of turmoil, and maybe for the next 6 months, uh, there could be trouble for the auto space. Although I felt and I have said that time and again that auto industry might be coming out of a lull, but they have been bruised and battered by a number of you can say issues. So wait it out for a year, year and a half. You'll make profits on both the stocks and make good profits. I think Motherson Sumi over 18 months, there is a possibility for it to be seen around 180 to 200. Similarly, wiring stock will also go to 60, 70, but you have to give something like 18 months to 2 years for them, for those numbers to come in. Okay. Any idea about roofing companies, HIL or see HIL is good, but again it would be impacted by raw material cost, etc. So I won't say that you go ahead and buy into them. That's the call. See, Hindustan Zinc and most of the metal companies, I'm not following that much. My view here is that metals have done extremely well over the last 1 year or so. There could be more traction left, but it's better to probably book profits and take your money off in metals on any rally. That's the call. Yes, I think midcap IT is a very good, you can say, proxy to the high volatility that we are seeing. But something like Tata Elxsi have gone up a lot, so I won't say that you buy now. But something like an L&T Infotech, Soft on declines to 440, 450. Those are good levels to buy into midcap IT stocks or these kind of stocks. Lancer Containers, I don't have any idea about it, so I won't be able to comment on it. See, I don't see DMart doing extremely well. See, if you want to buy DMart, buy above 4,300. That is where, I mean, a trade could be taken in with a stop loss at 4,100 and a target of 5,000. I think at this point of time, I won't say that you buy into a DMart. See, MTAR for some reason it has fallen. Gland Pharma, I feel, is expensive. Wait for some declines to buy. MTAR Tech uh, is expensive, and I'm surprised with the kind of fall it saw just recently. A stake was sold at a particular level, and some crore shares were sold. But we have to see how it behaves. MTAR is a good stock to buy from a long term point of view. I won't say that you get into Root Mobile. The numbers are not that encouraging for me to say that you can buy into Root Mobile. Wait for 1 quarter results at least, and then take a call. Both companies are in avoid Balaji Amines and Transpac. I won't go into chemicals or major chemical companies at this point of time. Latent view again an expensive stock. Wait for some declines to buy. I won't say you buy here. Look for larger consumer centric companies to buy into. Look for companies which have fallen a lot due to these reasons. Something like a Nestle at 17,000 attracts me. Yes, probably not for the next 6 months. See, whatever you buy for the next 6 months, be very careful at what you're buying, because things could be very bad or very good for the market. So if the market falls 5-7% from here, then everything will fall. So that's my call there. But you have to look beyond. So if you're looking at 2 years point of view, I think midcap IT, midcap pharma, and even consumer names look good, because at one point of time, inflationary pressure or inflationary cost will peak out, and then these stocks will move up very sharply. So Nestle could go to 19,000, 19,000 and a half very quickly once things normalize. So look for these companies at depressed levels to buy. Look at a Tata Consumer at around 730, 740. Looks very attractive, although it can go to 680, but one can start accumulating here. That's how you get bargains in this market, rather than looking for something which have already run up and then you buy. So you won't get bargains there in the market. You'll get bargains into stocks where there is a near term pressure in the market. Look at real estate companies which have gone down also. All right. What else? Tanla at current levels, I believe Tanla is a very interesting company. So results have been pretty good, but the stock has relentlessly fallen from 2100 now below 1400. I think Tanla will be a very big buy around 1300. If you can get it around 1300, those are very good levels to get into. Let's see how the results pan out for March quarter. Hopefully, it would be good, but there is some reason or the other for the stock to fall so much. I mean, it's down something like 30% from the highs. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly do subscribe to my Patreon network. Thank you.